Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. And let me tell you, NuScale Power Corporation's latest report is quite the read. It is like trying to understand a new language, but don't worry, that is what we're here for. Today we're diving deep into this filing to uncover the real story behind NuScale's financials and future prospects. So boo! Keckle up and join our Discord channel, linked in the description below, to keep the conversation going. Alright folks, let's cut to the chase. What do we have here? NuScale, a company aiming to revolutionize nuclear energy with small modular reactors, or SMRs. They've just dropped their annual report, the 10K, and as you can imagine, for a company in this cutting edge industry, it is packed with information, some good, some concerning. So let's break it down, starting with the big picture. So NuScale is essentially a holding company for NuScale LLC, and their main hustle is designing and selling these small modular reactors, or NPMs. They've been at this for years, investing heavily in R&D, and they've even snagged approval for their design from the US Nuclear Regulatory Commission, or NRC, which is a huge deal in this industry. Now, the company says their technology is unique because it is prefabricated factory, built and uses passive safety features, essentially meaning it is designed to be inherently safe and doesn't rely on complex systems to prevent meltdowns. They believe this makes it scalable, cost-effective, and reliable for delivering carbon-free power. They're touting a 77 megawatt gross power output per module, and they've even got patents globally to protect their intellectual property. This is a testament to their commitment and innovation in a sector that demands high levels of safety and reliability. But here is where things get interesting. Every innovative company faces risks, and NuScale is no exception. They admit they haven't actually signed a binding contract to deliver a single NPM yet, and there is no guarantee. They are also up against international competition, particularly from China and Russia, who already have commercial SMRs operating their strategy also. Avely relies on partnerships like the one with ENTRA1 and Fluor, which could be a double-edged sword if these relationships sour. This is pretty direct, right? You can't sell something if you haven't got a customer for it yet. This lack of firm orders is a major red flag, indicating the early stage of their commercialization and the challenges of bringing such a novel technology to market. Now let's talk about the financial guts of the operation NuScale, as a holding company relies heavily on its subsidiary NuScale LLC for cash flow. This means distributions from NuScale LLC are crucial to cover taxes, pay off agreements, like the tax receivable agreement, and pretty much keep the lights on as a public company. This dependency is a significant structural risk. Let's look at the numbers here. Their total assets grew significantly from about $544 million in 2024 to over $1.4 billion in 2025. This jump is mostly driven by their cash and short-term investments, which is good because they need a war chest for this kind of venture. However, their liabilities also jumped from around $91 million to nearly $300 million, mainly due to increased accounts payable and accrued expenses. This indicates they are taking on more short-term obligations as they scale up. On the equity side, their class of common stock has seen a massive increase in outstanding shares from about 122 million in 2024 to over 318 million in 2025. This means they've been issuing a lot of new stock, likely to raise capital, which dilutes the ownership of existing shareholders. But that is typical for early stage growth companies. Now, for the income statement, revenue for 2025 was about $31.5 million, down from about $37 million in 2024. Not a great sign on the surface, but the cost of sales also decreased, so their gross margin actually improved from about 32 million to just over 11 million. This is where things get really interesting. Their research and development expenses remained high at around $45 million year over year, which is expected given the nature of their business. But look at this, general and administrative expenses exploded from about 76 million in 2024 to a staggering $610 million in 2025. This massive increase is primarily due to a milestone contribution of $507 million tied to their partnership agreement with ENTRA1. It seems for now they are expensing this significant payment rather than capitalizing, which is impacting their bottom line. Avely. And the big number, the one that tells the real story, their loss from operations for 2025 is a whopping $690 million compared to about $139 million in 2024. That is a nearly five-fold increase in operational losses. This is a direct consequence of that massive GI Day expense related to the ENTRA1 milestone payment. When you see those numbers, it is clear NuScale is in a high stakes game. They're spending heavily to advance their technology and secure partnerships, but the lack of firm revenue from actual SMR sales is a significant concern. The astronomical jump in general and administrative expenses driven by that milestone payment is a major talking point. Here it highlights the company's strategy to push commercialization, but at a very steep, immediate cost. NuScale claims they have enough cash to operate for at least the next 12 months and beyond thanks to their ATM programs and investments. This is crucial given their current operational losses and the capital-intensive nature of their business. Looking at their cash flow statement, you see they used about $460 million in operating activities in 2025, a significant increase from negative $108 million in 2024. This is clearly linked to that milestone payment and increased procurement of long lead materials investing activities. Also consumed a large chunk of cash, mostly for purchasing investments, clearly showing they are trying to park their cash safely, while it is not being actively deployed in projects. On the financing side, they brought in over $1.3 billion in 2025, primarily from issuing Class A common stock through their at-the-market programs. This shows they're actively tapping the equity markets to fund their operations. And the bottom line, the net loss for 2025 was nearly $665 million, a substantial increase from the $348 million loss in 2024. This widening loss is precisely why you need to pay close attention to their revenue generation and operational efficiency. It all comes down to this statement: they are betting big on the future of SMRS and need significant funding to get there. The biggest risk is clearly not securing enough customers or funding before they run out of cash. Let's talk about the cash itself. As of the 31st of December 2025, they had cash and cash equivalents of over $836 million and investments worth about $450 million. This sounds like a lot, but remember what we saw about their operational losses and that massive milestone payment they are burning through cash rapidly. And that accounts payable and accrued expenses number nearly $287 million in 2025 compared to just about $48 million in 2024. That's a huge increase, meaning they owe a lot more money to suppliers. And for other expenses short term, this is a consequence of aggressive procurement and development. Now for my take on NuScale, as a company pushing boundaries in nuclear energy, they have a compelling vision and a technology that has been recognized by regulators. The progress with the NRC is a significant positive step. But here is the blunt truth: they are burning through investor cash at an alarming rate. The massive jump in GTIA due to that milestone payment is a wake-up call. It shows the immense financial pressure to commercialize, even if it means significant upfront costs without guaranteed returns. The Entropy One partnership is a double-edged sword. It provides access to a potential customer pipeline, but the payments are structured in a way that requires NuScale to outlay substantial cash before any revenue is generated. This is a risky financial gamble. They need to convert these partnerships and milestones into actual revenue, generating contracts fast. The company emphasizes the reasonableness of their estimates and judgments, a common phrase in financial reporting. It is a reminder that figures on paper are always influenced by management's perspective and assumptions. NuScale is playing a long game, and the market clearly recognizes that, but the path from development to profitable commercialization in the nuclear industry is incredibly challenging and capital intensive. They've got the technology and regulatory backing, but the financial hurdle they're facing is immense. Success hinges on their ability to secure those first binding customer contracts and manage their cash burn effectively. The risks of not achieving profitability or securing adequate future funding are very real, alright. That is our deep dive into NuScale Power Corporation's latest filing. What do you think about their strategy and those massive operational losses? Let me know your thoughts in the comments below. If this breakdown was helpful, give this video a thumbs up and subscribe for more corporate insights. Don't forget to join the conversation on our Discord server linked in the description. Thanks for watching Corporate Decoder, and we'll see you in the next video.